Welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamoan. In this episode, we're diving into the latest developments in the mortgage industry, particularly focusing on First National's recent earnings report and how recent mortgage rule changes might affect the market. Stay tuned as we explore how these changes could benefit First National's margins and the broader implications for the mortgage and real estate landscape in Ontario. First National Financial has recently highlighted potential benefits from new mortgage regulations in their third quarter earnings report. The company noted that recent changes, such as extending 30-year amortizations and increasing the cap for insured mortgages, might provide a slight boost to their margins. President and Chief Executive Officer Jason Ellis elaborated on this during their earnings call, suggesting these changes could expand their pool of eligible borrowers, thus supporting profitability. Ellis mentioned that while the changes are constructive, they are not game-changing. However, they could increase the addressable market of borrowers for First National. The extension of 30-year amortizations, available to all first-time homebuyers and buyers of newly constructed homes, is seen as a positive move at the margins. Unlike traditional banks that rely on deposit funding to compete in the uninsured mortgage space, First National uses mortgage default insurance and Canada Mortgage and Housing Corporation-sponsored securitization programs. This strategy has led them to have a higher proportion of high-ratio mortgage originations. One of the notable changes discussed was the $1.5 million cap on insured mortgages. While this could slightly expand the addressable market, Ellis pointed out that the high income required to sustain mortgage payments on properties at that price point might limit its impact. He noted that an income approaching $300,000 would be necessary, which is a significant threshold. Additionally, the Office of the Superintendent of Financial Institutions' decision to remove the stress test requirement for uninsured mortgage switches, effective November 21st, was addressed. Ellis commented that this change probably will not lead to a measurable impact, as it was not a major barrier to movement between lenders. Despite these regulatory changes, First National reported a drop in origination volumes year over year due to heightened competition in the broker channel. Single-family mortgage originations, including renewals, fell to $6.7 billion in the third quarter, down 20% from the previous year. This decline was attributed to increased competition from bank lenders offering competitive rates and incentives. However, it's not all doom and gloom. First National achieved a significant milestone with its mortgage under administration surpassing $150 billion. Chief Financial Officer Robert Inglis emphasized that this milestone is not just a number, but the foundation of profitability for years to come. Looking ahead, First National is optimistic about the coming renewal opportunities. They are positioning themselves to service borrowers for subsequent mortgage terms, anticipating increased renewal volumes in the next few years. Ellis noted that their retention rate on single-family renewals is comparable to their long-term average, with no significant changes expected. In terms of their alternative lending portfolio, Excalibur, Ellis explained that volumes were slightly lower than last year, yet the Alt-A market remains relatively unaffected by competitive dynamics in the prime space. From a credit perspective, the Excalibur program continues to outperform expectations. As we move towards the end of the year, First National is forecasting higher year-over-year originations in the fourth quarter, buoyed by interest rate reductions and a growing residential commitment pipeline. They expect a strong start to 2025, supported by new home ownership incentives announced by the federal government. On the commercial side, First National has seen a 17% increase in commercial origination compared to last year, thanks to incentives for building multi-unit rental stock and affordable housing. They anticipate closing 2024 with record annual commercial mortgage volumes. In conclusion, while First National faces challenges from increased competition, recent regulatory changes and strategic positioning provide avenues for growth and profitability. The company's ability to adapt and leverage government programs effectively positions it well for future success. That wraps up this episode of the Ontario Mortgage and Real Estate Insights podcast. Thank you for joining me, Steve Hamoan, as we navigated the latest in mortgage and real estate news. Be sure to tune in next time for more insights that can help you stay informed and make well-informed decisions in the ever-evolving world of real estate. Until then, stay curious and stay informed.